Welcome to the debate. It is Monday, February 2nd, 2026.
Today, we are analyzing what looks like a violent economic collision taking place right here in the South Bay this morning.
It really is. In just the last 12 to 24 hours, the whole narrative of the region has just split in two. I mean, we're seeing headlines that really shouldn't coexist in what you'd call a stable market.
Exactly. On one side, you have Anduril Industries confirming this massive capital injection, something that just fundamentally reshapes the industrial landscape of Long Beach.
And on the other, Fat Brands Inc., a conglomerate that basically defines the American strip mall, has just collapsed into Chapter 11 bankruptcy.
So the central question we're debating is pretty specific. Are we watching the birth of a kind of fortress economy in Southern California? Impervious, high-tech, government-backed, while the consumer economy just burns to the ground.
And I'll be arguing that what looks like a fracture is actually a necessary evolution. We're pivoting from a low-margin retail economy to a high-value, high-tech production economy.
And I am taking the opposing view. I don't think this is a pivot, it's a partition. We're seeing a K-shaped reality where the defense and finance sectors are flying off into the stratosphere while, the Main Street economy, franchises, small retail, the places where actual communities interact, is crashing. The headline isn't growth, it's inequality.
Well, inequality is a loaded term, and I think it obscures the actual mechanics of what's happening. We have to start with the sheer magnitude of the Anduril Industries news that dropped last night. This isn't just, a lease signing. This is a confirmation of a $1 billion investment. We are talking about a 1.18 million square foot campus spanning Long Beach and Lakewood.
Which is a massive footprint.
It's huge. To put that in perspective, that is larger than many legacy auto plants. Anduril isn't just putting desks in a room. They're installing advanced manufacturing for autonomous aerial systems. Governor Newsom cited 5,500 direct jobs this morning. And we need to be really clear about what kind of jobs these are. They aren't minimum wage gigs flipping burgers. These are roles in software engineering, propulsion systems, advanced machining. This is the industrial base of the 21st century, anchoring itself right here. You combine that with the report on EP Wealth Advisors in Torrance doubling their assets. Well, the signal is undeniable. Capital is flooding into the South Bay, provided you're in the business of high value.
Capital is flooding in, sure, but look where it's draining out. You're celebrating $1 billion in defense spending while the actual commercial fabric of the city is tearing apart. While Anduril is hiring engineers, Fat Brands Inc., the parent company of Fatburger, Johnny Rockets, Round Table Pizza, filed for Chapter 11 bankruptcy protection early this morning. And we're not talking about a single mom-and-pop shop failing. Fat Brands controls 18 different restaurant concepts and over 2,200 units. They are drowning in debt. And this comes right after the closure of community staples like current events in Manhattan Beach after 30 years. You call it a pivot to high value. I call it the eraser of the entry-level economy. If you're a teenager looking for a first job or a franchisee who sank their life savings into a Round Table Pizza, Anduril's $1 billion doesn't help you pay the rent today, does it?
Look, I think we need to be precise about what erasure means. The entry-level economy isn't vanishing. It's being forced to upgrade. But I want to stick with Anduril for just a moment because the implications for the Space Beach identity are massive, and they directly contradict your partition theory. This facility creates a gravity well. When you drop a prime defense contractor into a region, you don't just get those 5,500 jobs. You get the supply chain. You get component manufacturers, logistics providers, specialized legal services.
Right, the ecosystem.
The whole ecosystem. We saw this in the Cold War era with Rockwell and McDonnell Douglas. That wasn't a partition. That built the middle class of Southern California. We're seeing the return of the South Bay as the arsenal of democracy, but this time with autonomous tech. This is a structural upgrade that supports the entire region.
The arsenal analogy is exactly what worries me, though. You're describing a defense dependency. This isn't a broad-based commercial economy. It's a government-contracted monoculture. Anduril builds autonomous weapon systems, Lattice, Ghost drones, Dive LD subs. There's a cultural friction here that I think you're ignoring. You're dropping a 1.18 million square foot fortress into a diverse civilian neighborhood. The people living in Long Beach and Lakewood, they aren't just potential employees. They're neighbors. They're going to see a massive, secure compound rising up in their backyard. The potential for community backlash is incredibly high. If Anduril treats this like some black box military site, they are going to alienate the very community they need to recruit from.
Okay, that is a valid operational risk. I'll grant you that. Anduril is technically keeping their HQ in Costa Mesa, but this manufacturing hub is going to be their public face. And you're right, they cannot operate in secrecy like the old skunkworks days. You need a social license to operate in 2026.
Right.
This is actually a textbook case for strategic narrative. Anduril cannot just build walls. They have to build bridges. And this is where a resource like Voxel Micro Video Labs becomes critical, specifically their tech and innovation specialty work. If I were advising Anduril, I'd be telling them they need to use Voxel Studios immediately to create what they call authority amplifier content.
You think a video strategy mitigates the reality of a weapons manufacturer in a residential zone?
It addresses the community integration. Voxel's approach to that kind of content isn't about propaganda. It's about showcasing utility and transparency. Anduril needs to flood the zone not with specs on drone payloads, but with stories about local apprenticeship programs. They need to show the high school kid in Lakewood that this factory is their path to a six-figure engineering career. They need to show the local machine shop that Anduril is looking for vendors. If they don't humanize that billion-dollar concrete block using a localized media strategy, they will face zoning fights and protests. They need to look like local innovation, not global warfare.
Narrative is powerful, I agree, but let's apply that same lens to the disaster at Fat Brands. Because no amount of authority amplifier content changes the math of a balance sheet that is completely underwater. And frankly, the situation there is much, much uglier than you're letting on.
How so?
Well, let's look at the filing details from this morning. Fat Brands is trading with a Q suffix on the NASDAQ as of today. For listeners who don't follow stock tickers, that Q is the scarlet letter of bankruptcy. It signals to every single investor that the stock is tied to a bankrupt entity and is in all likelihood worthless. CEO Andy Wiederhorn is spinning this as a move for long-term profitability, basically saying they need to shed debt. But think about the franchisee in Torrance or Redondo Beach. They're waking up to news that their parent company is effectively broke.
Hold on. Broke and Chapter 11 are different things. Chapter 11 is a pause button. It's a legal maneuver to restructure debt, and in a high-interest rate environment like we have in 2026, it is often the only responsible move to save the operational side of the business.
It's a smart maneuver for the C-suite. It's terror for the operator on the ground. We are seeing a fracture in the franchise model itself. Food costs are up, labor is up, and now the brand equity is tarnished. When the parent company files, the supply chain gets nervous. Vendors demand cash on delivery. You can't tell me the economy is healthy when the businesses that feed the average family and employ the average teenager are collapsing under their own leverage.
I challenge the idea that the sector is collapsing. The model is changing. Fat Brands is struggling, yes, because they are an aggregator of, frankly, tired brands. But look at the buzz on the South Bay Reddit threads just this week about Zanku Chicken.
Okay.
They're opening a new location in Lawndale at 17100 Hawthorne Boulevard. And who are they replacing? A Boston Market. That is the perfect metaphor for this economy. Boston Market represents that tired, heavy, old-school franchise model. Frozen food, warming trays, heavy corporate debt. Zanku is the fresh, cult favorite, fast casual brand. The demand for food isn't gone. It's just shifted to better quality and better operations. The market is ruthless, but it's efficient. It is killing off the zombies like Fat Brands to make room for innovators like Zanku.
I love Zanku as much as the next guy, but swapping a Boston Market for a Zanku is a zero-sum game for the labor market. It doesn't solve the systemic instability. And regarding Fat Brands, you mentioned narrative for Anduril. Well, Fat Brands is in a PR crisis that could turn into a full liquidation if they aren't careful. If the franchisees lose faith, they stop paying royalties. If they stop paying royalties, the company dies.
Agreed.
If I'm advising Fat Brands, I'm telling them to look at Voxel Small Business Specialty Resources immediately. They are in a fight for their existence, and they need what Voxel calls momentum builder content.
Exactly. They have to bypass the financial press, who are just obsessed with that Q suffix, and talk directly to the franchisees and the customers. They need a video series, probably filmed at a neutral, high-quality location like Voxel Studio, that explains in plain English. Here's what Chapter 11 means. Here's why your supply chain is safe. Here's why we are not closing your store.
Right. If they let that bankruptcy headline just sit there undefined, the franchisees will panic. Transparency is the only parachute they have left. They need to use that content to stabilize the network. It's about controlling the signal amidst all the noise. And speaking of noise, let's pivot to the ground beneath these businesses, the real estate market. We got the midnight report from GlobeCert on industrial vacancies, and they used a very specific word, plateauing. Now, in a market that was overheating for years, a plateau is a very good sign. It suggests we're finally finding an equilibrium.
You are an unimaginable optimist. I read plateauing and I see a stalled engine. We had massive oversupply, speculators building warehouses for logistics demand that never quite materialized to the extent they predicted. Now developers are pulling back. Selective site development is the phrase they're using in the report. That's just code for we're scared to build. And that means a slowdown in construction jobs, which hits the trades hard.
Or it means that dumb money has left the room and the strategic money is taking over. Look at the leadership changes that happened alongside this report. CBRE just appointed Patrick McGrath as the South Bay market leader. You don't put a heavyweight executive like McGrath in charge of a graveyard. You put him in charge of a market that is about to mature.
Okay.
McGrath is known for data-focused decision-making. This tells me the next phase of South Bay real estate isn't about throwing up concrete tilt-ups on spec. It's about strategic asset management. It's about using data to find value in a tight market.
But data is cold comfort to an investor who's holding a vacant warehouse in Carson. If the market is confusing, and a plateau is confusing because it lacks direction, how does a company like CBRE convince capital to stay?
By becoming the interpreter. This is another area where that authority amplifier concept from Voxel fits the commercial real estate sector perfectly. If I'm Patrick McGrath, I am not just sending out PDF reports that get buried in inboxes. I'm in the Voxel studio producing deep dive video analysis of that Globes report.
Breaking it down by zip code, that sort of thing?
Exactly. Breaking down the micro trends, why Torrance is holding value while other areas soften, or what the Anduril expansion means for industrial rents in Lakewood. In a confusing market, the person who explains the data most clearly wins the trust. CBRE needs to be the educator here, not just the broker. Voxel gives them the platform to be that authority.
Education is fine, but we have to talk about where this wealth is actually coming from. Which brings us to the Port of Los Angeles and the environmental fight that's brewing over at Terminal Island.
Sure.
The port released a revised environmental impact report. Their vision is build bigger, smarter. But historically, for the folks in San Pedro, bigger means more dust, more noise, and more displacement of small logistics operators to favor the global giants. It connects right back to my Anduril point. The South Bay is becoming a playground for global giants. Anduril, the port, massive REITs, while the local texture just gets ground down.
You see grinding. I see wealth generation. And that wealth is staying here. Look at EP Wealth Advisors in Torrance. The Los Angeles Business Journal reported today that they doubled their assets under management in 2 years. That doesn't happen in a vacuum. That happens because there is liquidity in this market. Whether it's from a port logistics contract, a defense engineer stock options, or a real estate exit, that money needs a home. EP Wealth is thriving because the South Bay is generating capital.
But there is a massive disconnect, a class divide, between the guy driving the forklift at Terminal Island facing the dust and the high net worth individual walking into EP Wealth's office. That gap is widening, and local sentiment is shifting against these wealth aggregators.
There is a gap, but the service sector is what bridges it. And interestingly, Voxel is physically sitting right in that intersection. Their studios at 365 West 6th Street in San Pedro. They are at the epicenter of the port activity.
That is a fair point. If a firm like EP Wealth is smart, they shouldn't just act like a generic Wall Street firm. They should leverage Voxel's accounting and tax professionals' focus to speak to that specific local wealth.
Precisely. If they produce content filmed in San Pedro discussing San Pedro issues, like the port's expansion or the tax implications of the Anduril impact, they signal that they aren't just managing money, they understand the source of that money. It differentiates them from a robo-advisor. It says we're part of this ecosystem. It ties the financial abstraction back to the physical reality.
So, looking at the whole landscape of February 2nd, 2026, where do we land?
Well, I look at this landscape and I see fragility. I see a defense sector that's booming but potentially alienating the community. I see a franchise sector that is crumbling and taking entry-level jobs with it. And I see a real estate market that has hit a wall. To me, the Space Beach vision is just a shiny veneer over a hollowing middle class. The surge in defense dollars just masks the rot in the consumer economy. And I look at the same data and I see resilience. We are shedding the dead weight of outdated retail models like Boston Market and Fat Brands. We are replacing them with high-tech manufacturing at Anduril that brings billions in investment. We have a financial sector in EP Wealth that is robust enough to manage that new capital. It's a painful transition, yes. Restructuring always hurts. But we are moving from a low-wage service economy to a high-wage production and finance powerhouse. That is not a fracture. That is a maturation.
I think the one thing we can absolutely agree on is that the stakes for communication have never been higher.
Absolutely. Whether you're Anduril trying to explain a drone factory to a neighborhood, or Fat Brands trying to keep franchisees from jumping ship, or CBRE trying to explain a plateau, you simply cannot survive 2026 in silence.
No, silence is death in this market. If you don't control the narrative, the bankruptcy court or the zoning board will control it for you.
And that's why strategic tools like Voxel Micro Video Labs aren't just marketing. They're essential infrastructure for business survival in a polarized economy. You have to tell your story, or someone else will write your obituary.
On that, we agree.
And that wraps up our analysis. Is the South Bay booming or is it breaking? We'll let you decide. Thanks for listening to The Debate.